Good morning, guys. Welcome to this Tuesday, March 25th. And overnight is looking great. So far, would be we had a nice strong close yesterday. Uh, so 2 days, Friday and Monday, both of them are closing on the strong side of it, that and the strong side on new highs. And I would say that we may have just seen a turn in the market, a pretty good one at that. So after having all this churn going on down here in these lower areas, and when it's been just kind of driving us nuts, finally we got a little bit of lift. Friday had a good close. We had a gap up and a nice day yesterday, up day. Took out some key resistance area running up against this congestion area, and now we are in the overnight. Looks like we are on par or on track to continue that move to the upside. So actually a pretty optimistic start of the day. Let's see if they can hold on to that. Days like this, we have all this kind of down activity we had in the last few weeks. Doesn't necessarily need to be. I mean, 2 days is a great start. It doesn't mean that it's going to continue, as they had to be as really vigilant about when you run into these resistance areas, as we're going to get to. If they can take out a couple of those, I think we are going to set the stage. At that point, it's going to be more of a fear of missing out effect, where it's like, oh shit, this is turning. I'm not in the market. I'm sitting on the sidelines. I need to get in, and that's where you start seeing the real rally begin. And the fear of missing out, a crowd starts piling back on again, instead to avoid, well, not to have to chase the market too far. So. Pretty good. A pretty good start of the day. Now, news this morning, nothing at 8:30, but at 9 o'clock we get housing data, Case Shiller and FHFA. We have a speaker at 9:05. 10 o'clock we get consumer confidence and new home sales and Richmond Fed manufacturing. So 9 o'clock and 10 o'clock we have news today. 2-year auction at 1. And the 2-year auctions, the short-term auction, are also kind of interesting because they give you a sense of the Fed has been funding a lot of stuff on the short term. I don't know quite exactly what they're doing right now, but Yellen in the prior administration was funding all the paper on this short term, all the new debt on the short term paper, which is kind of stupid because then it matures too quickly and you had to roll it to new interest rates within a 2-3 year period. But so not a great thing to do, but you did that to keep the long-term rates under control. So it's now I don't know exactly how much they're funding on the short term or how they're balancing that, but pay attention. 2 o'clock we get a 2-year auction. So 9 o'clock today, 10 o'clock today we have news. 2 o'clock we get a 2-year auction, and that's the news for today. So looking at the ES, just diving into this. Here's your Friday trading. A nice close, strong close. Yesterday's gapped up into today's trade, or yesterday's trading, starts trading higher, took out some key resistance, especially this area down here, the 57.30 to 40s. Never really looked back. It just took it out and stalled here around the 58.10s. Start going sideways, and now we're looking at extensions now going into the overnight. So this could be the beginning of a move out of the middle to the upside. Definitely has the starting point for it. We have taken out key resistance. We are moving higher. So I would trade it as such, at least for now. Just be mindful that you're getting into this volume edge here at the 58.50 to 60s. This area right there. 3-level edge, a low of that prior distribution. A little volume edge right there. So then you're going to get into the next level at 58.75. So here's the 58.45 to 50s. Here's the 58.65 to 70s. And both of those need to come out. If they can do that today, I think we are in a pretty freaking good spot. But I would be looking for short setups against them. That's a little bit less aggressively since we have another day of extensions to the upside. So it could very well be a day when they blow straight through it. So, but I would be looking at engaging the market up there for short at those two levels. So that would be 58.45 to 50 would be this area right here, and the 65 to 70, these two resistance areas. So they can clear both of these. We are in pretty good shape. So, but starting off from the long side, we're in the move out of the middle to the upside. I'm going to trade it as such. So looking to buy weakness at this point against the 58.25s. That would be pretty aggressive. 58.15s, 5800s for rotations back up again. One level below that, 57.90s. If you get that far down, I would be a little bit concerned, but that would be one level outside the obvious. So I'm going to buy weakness, 58.25s, 15s, 5800s, down to the 57.90s for rotations back up. And as I said, this 58.38 to 40s, I'm not sure how strong it is. It starts this two-level edge, so it could hold, but I would think the better shorts comes here at the 58.50s, 58.65s, and 58.75s. These three areas. That's where I think your better shorts are going to come if they're going to come. But since we are in the move out of the middle, I'm going to be a little bit less aggressive on them. But these are pretty key resistance areas, which we need to clear if we're going to have a shot at really turning this whole thing around. But remember, they were down here bouncing against this area for a while, the 58.80, the 5900s, and then finally they just kind of blew through it there. They had one probe to the downside, then we had that move to like mid-February when they really started taking this lower, and that really created some problems. So after they busted through this, now it's going to be a pretty good resistance on the way back up again. So looking to buy weakness, 58.25s, 15s, 5800s, 57.90s. Below 57.90s, I'm going to take off the long bias and go back range bound, looking for a retracement trade of these single print Bs and potentially a reverse retest of the 57.60s here. So that would be the on the downside if you start taking out the obvious support areas and we take off the long bias. The next reverse retest would be a test of the 57.60s, this area right here. So a reverse retest at that area, I would be looking for a buying opportunity, but at that point, just a little bit less aggressive again, because now we're taking off the long bias and looking for a little bit more weakness building up. So that's kind of where we are on that one. So 57, 60s, that's going to be down here in this area. So this is the reverse retest we're talking about. So they take out that 57.90s. We can see a retracement trade taking out this whole chunk of overnight and single print data because they didn't spend a lot of time here. They were that pretty much just ran through it. So if they take out that 57.90s, then potentially trading all the way back down here, and I would be looking for buying opportunities when it gets down to the 57.65s. Otherwise, I would probably look for a short retracement trade there. All right, so that's how we get started on the ES. Fairly straightforward, I think. Let's hope this move out of the middle has some legs and can keep going. That's going to improve our 401ks for sure. Yesterday was a good day, but it's, as I said, sometimes in a down market, I don't think we're in a bear market, but sometimes you get fairly violent retracements, and it's like a fear of missing out kind of retracement. But you need a little bit more institutional buying to really turn the trend. And so far, it's a couple of days. Yes, kind of people starting to nibble, and then we'll see if they can hold on to that. Looking at the bonds. Heading down, they're down here at the 116 edge. Look at the overnight. They were up here. I was looking for the overnight to run it down to the 116s and took it out to the 16s. They're taking out that volume edge. Look at that. They're taking out that 116 volume edge heading down. Chances are they may run down to that 114 level at this point. They're not quite there yet. This looks to me right, the probing to the downside. So we have this 116 and 116.28. So the one level below the obvious is where they are right now. And if that edge holds, chances are we're going to trade back and stay around that 116.08 level. So initially, I'm going to look for retest of this low, potentially lower. It may already have happened right now at the 15.28. You see Y period is down here trading right there. So it could already technically have happened. We'll see. But if they retrace back, I would be looking for shorts against 16s and 16.08s up to the 16.12 with a little bit of caution because we are right at this attractor area. So they don't have to necessarily develop a nice short trade. They could just kind of trade back up here and then kind of just stall. So, but still, starting off with a slight bias to the downside to see if they can take out this low and potentially take it lower. But if they keep going here, and the next stop going to be down here at the 114.20. That's your attractor as your mode right there, and that's pretty obvious. So that could be a nice short trade on the bonds in there. That means the yields are coming back up again, long-term yields, and not good for the small and mid cap, and nothing you want for the for this rally, the equity rally, to continue. If it's going to continue, lower rates would certainly help. All right, looking at the Nasdaq, and big techs had a nice day. They had yesterday. They're pretty well on their way higher. They still have a little bit of range to go before they hit this area right here, the 20,700 to 900. But the 200-point range of congestion, they were down here probing this area quite a bit, trying to get this going. If I fold this together like this and this like that, you see, okay, I split this guy out like that. Okay, a little bit less sloppy, but you can see it. They started taking that out, and that this distribution is back from, let's see if I do this, from 220. So on 220, February 20th is when this whole distribution started, and eventually they blew through the downside here. If you split out K, no, not that K, you split out that I, here you get to the next move out of the middle to the downside. So that's a split. That's I split. If I take that back out, fold it, yes, gets a little bit less sloppy, but in this whole area right there is where you have the congestion area. So we are heading up there. We are right up here, reverse retesting this area right now, the 20,400 to 500s. Now they can get through that one. We have a shot at coming up here and start testing this upper area. So that's kind of what we're looking for. So initially looking to buy weakness on the Nasdaq at this point against the 380s, 330s, 290s, 290s, and I would say below the 290s, I would start looking for that retracement trade. A little bit more aggressive on the Nasdaq. Now you could potentially argue the 230 being one level below the obvious, and I would buy that, but it's I would start thinking about taking off that long bias and looking for a retracement trade if they start taking out that 280s. Look for confirmation at 230s. Like they take that one out as well, and for sure you're heading lower. But 230 could potentially set up a nice long trade for rotations back up again. But then again, you see what, and it's going to be a reverse retest of the 150s is where we're heading next. That would be, they take out this area, the 280s. Chances are we may run it all the way down to that 150 edge and reverse retest this area at the 150s. And that happens, definitely take off the long bias and go back range bound. They could hold at the 150s, but chances are they may take that out and maybe push a little bit lower at that point. So we'll see how strong the market is. Are we going to get some fear of missing out, trading going on or not? But to get started, assume this is a move out of the middle to the upside on the Nasdaq and trade it as such. Looking for short setups. I mean, we got a range to go here before we start hitting that 700s. So you see we have some range here. A good like 400 points. It's a pretty spectacular update in the Nasdaq. So I would be looking for shorts against these areas of resistance. Just a little bit of caution. We are leaning to the water long side. We have a move out of the middle potentially going. So looking for shorts against the 450s, 520s, 560s, 570, sorry, 590s, 630s, 680s, up to the 720s. And these could all work for potential shorts. I would think the better ones is going to come when you get a little bit closer to that 700 level. And that's when we really start looking at. That's when we really start looking at the this area congestion. So on the way up here, yeah, you have a couple of volume here at the 500s, volume node right there. But how strong they are, anyone's guess, because we didn't spend too much time here. We kind of blew through it and then reverse back violently, and then finally start heading lower. So we didn't spend a ton of time in this area. So I would expect them to be able to cross it pretty easily and then start running into some resistance when they hit that 700 up to the 900. So that's where I expect them to find better resistance. So we could have a nice little run to the upside here before we start finding resistance. But then they had to get through that 7 to 9 area. And otherwise, we may see another big short setting up for another test of the lows. So that could be very much in the cards. But remember also, we're getting into the latter part of March, into that wrapping up the second quarter. So I believe if you remember in 22, I think we had in 2022, I think we had this big rundown here in the maybe 23. We had this big rundown in this exact time period, mid-February, mid-March, and that set up a beautiful rally into May, June. So that's more of a seasonal thing. So I'm thinking we're getting late in March. I think we may be past most of that churn to the downside. The only thing which works against that is obviously the tariff politics and all that stuff, how that shakes out, because that's obviously a different thing going on. So there's kind of a realignment in the economy, which could add some cross currents in the system in terms of how the market reacts. So seasonal stuff is just that. That's how it used to be. It could develop like that again, but I'm thinking that we may be past the worst of the selling at this point. All right, looking at oil and gold. And remember, we rolled gold on the 27th. It's going to be on Thursday, I believe, right? So last day on the April is on the 27th, and we rolled on the 28th to the June expiration. Now looking at the gold holding below this area, the 30 and the 34s, I split that edge now, so it's kind of two edges, but they're still holding below it. They were up here, reverse retesting this area again in the overnight, could not hold it and or take it out. So it looks to me like they may be setting up for a retest of these lows, maybe lower. The gold had a pretty freaking good run to the upside, so it could be due for a little bit of a pullback. So we'll see. But at this point, you can see that they ran it higher pretty hard. They pulled back a bit down towards the 3,000. Right now, they're in between these two high volume areas, the 3,000s and the 3,040s, building value. And anyone's guess where they're going to go. I'm going to fold this together, and you can see here split out yesterday. So we'll see where they're going to go from here. Next level up is going to be basically flipping this guy over like that. And now you have the potential distribution building in front of you. So they cut off the buying at 3,060s. The selling so far is cut off at 3,007. We'll see if they're going to probe a little bit lower before they find the spot to do that. It looks to me like we may have a new area building here. So watch that lower, the 3,000s, and that starts coming out. We can see a retracement trade all the way down to that 29.50 again. So we'll see, but definitely a distribution on gold. So splitting out C, splitting out the this was the next move to the upside. So they stalled here at 3,000 for a little bit, then had another move to the upside, and so far I backed off that thing. So definitely ran out of gas, and now we're finding a spot to start building value. But the way it's developing, I would say if you fold it together, it starts very much looking like a distribution is forming right here. So we're in straight three. I would start off range bound. I would keep it biased to the downside and see if we're going to retrace further. Yesterday was the day which kind of did not retrace any further. So technically we're in stage three. Doesn't mean we can't probe these lower edges. We can probe these 3008s, 3003, 2996 for rotations back up. But I would be looking for moves to the downside, testing these lower edges to get started. So initially looking to sell strength, 25s, 30s, and 34s for rotations back down. Above 34s, I'm taking off that short bias. And on the way down here, looking to buy against the 15s, 11s, and 6s with a little bit of caution. I prefer to buy against the 4s and the 29.96. If they get that far down, maybe the 6, 7s here for rotations back up again. Let's see how that's going to shake out. But that's where we are on gold. So we're in stage three at this point. Let's see if they're going to probe these lower edges any further. So that's kind of where I'm at on gold. And then oil slowly grinding higher, and that has to do with the tariffs on Venezuelan oil, tariffs on energy, basically punishing tariffs for people doing business with Venezuela. So there's some oil coming off the market. I think that's why the oil is trading higher. It could be it's also the pressure on the Iranians, so that's also coming off as well. So the Iranian supply is coming off, Venezuelans coming off, and God knows why The prior administration was pushing to get those countries rich on oil again, or let them use their oil resources, but that's what they did, and now they're cutting it off again. So and as that's supply chain adjusts and trickles through, I think that's why oil is trading a little bit higher. So I would just stay on the long side right now, look to buy weakness, but not super aggressively. So I'd look buying against the 69.30s, the 69s for rotations back up. Below 69, take off the long bias, go back range bound. And technically, we are pretty much right back in this. You see, May oil. You're pretty much back in this range up here. So this big distribution, they're pretty much right back up in this area. So we'll see. Looking for a potential reverse retest of these areas, the 70, 50 up to the 71s at this point. So let's see where they're going to go from there. But you have a bunch of confidence. I mean, the gas, I think, kicked back up again. It's creating a little bit more turmoil down there. But I think the bigger things is the max pressure against the Iranians to cut off that supply, and the Venezuelans cut off that supply. And just had to come up with more supply somewhere else in the meantime, in the short term, to cover for it until we get our own distribution or production up again and to even better levels. All right, so that's oil. Starting off with a slight bias to the upside on oil. Let's see how far they can take it. On gold, let's go range bound, look for further retracement, see if they're going to try to probe these lower edges any further. Back to the ES, and so far it looks to me like we have a pretty good shot here at taking this higher. So far they're holding on to their gains, so we'll see how that develops going into the day session. So I'll wrap it there for now, guys. So good trading, and I will see you back at 11:30 for the next update. All right, let's see if we can get the third day of a little rally here. It's a little bit of fear of missing out kind of rally. All right, guys, see you back at 11:30 for the next update.